Middle-aged couple, like I said, a little bit older, 70 and 72. Took me, like I said, about 2.5, almost 3 months to get in contact with them. And come to find out, they were already sold another policy. That's kind of what's my favorite words. Some other agents hate that word when they hear they already bought something else. But luckily enough, I said I was able to talk him into getting his review done and getting the options from us. So like I said, I never got a chance to even talk to him, see him. I've called this lead, like I said, anywhere between 5 to 10 times. It was still nothing, even though it was the holiday season. Um, but he was like, you know what? Yeah, just come on by. My wife thinks you're paying way too much money for it. That was his exact words. Lets me over, and they can't find anything. They only to tell me how much they're actually paying inside their check out of their checking account. And the wife was livid because the money came out and she wasn't expecting it, even though she wrote the app almost a month prior. So lo and behold, what we have to do, we have to call the carrier, right? So spent easily 35 minutes on hold with Foresters until we found out what they actually had. Because with their age and knowing the person that actually wrote the policy, it was nearly impossible to figure out what they actually had. Either I thought it was a whole life plan, it turns out to not be a whole life plan. Trying to run the quotes, and while I'm on hold to figure out what kind of fits or how much coverage they probably should have, just giving myself the best possible chances, right? To be able to walk out with some type of application, right? So, long story shortened, right? So, at the end of the day, it comes to find out they end up having $20,000 10-year term policies. Both of them paying over $100 a month for them on a $20,000 term of a product that we can't sell with Foresters. It's called their Strong Foundation. That's their low end, but it was still $100 a month for $20,000. The equivalent to that of what we could sell, I mean, I could have got them 50,000 for, I think it was like 125, maybe 135, 40. It's somewhere. It's only 20 to 30 bucks more to get more than double the coverage, or even going somewhere else. It's right about the same 120 to 150 range for $50,000 of coverage. But that's not what they wanted. They wanted whole life. They were under the impression that they bought whole life. Because given their age, given their health, they would be a perfect shoe in for a mortgage payment protection plan. And like I said, after this point, I'm there for about an hour and 30 minutes. And just now we're getting to the actual quotes, simply because the fact of trying to dig out what they had for his policy, the wife's policy, it was just a nightmare. Um, but during that time, what we were able to do though was, once again, going back to one of our first calls of the actual year, having those multiple product options. I saw a Humana book on their table. Um, and he also made a weird comment about how much he spent for his one medication. So I'm like, oh, well, what plan do you actually have? And we started talking about his Humana plan. It was a Humana Advantage HMO Plus Gold, which is in our county. That's like that's the best Humana product you actually can have. Um, but he was oddly enough taking two tier three medications. So those that are kind of semi-familiar with Medicare, you know what that is. If you're not, it's the drug it's the brand name drug. Typically, it's going to be one of the more expensive drugs outside of the tier four and tier five drugs, where there's really no actual coverage. But just he was taking Ozempic, which is a brand new insulin style drug, which it's insulin once a week, so one shot can last him for a whole entire month. That one shot, I believe it costs almost $250 with the actual coverage. It might be a little bit more than that, because it's about he ended up, yeah, it would be $600 for a 3 month supply if you went that actual route. Um, Half of which because he was inside of his donut hole from the previous year when he first got it. Other half of which it was just a ridiculous amount of money. It's like 150 or 141 a pop every time he gets it filled. And if you did three of them, so you're talking well over almost over $400, $500. Plus, he had another medication. What was his other drug? Give you the real life. Um, Jardiance, that was other drug, and his Jardiance also was a tier 3 drug for him, so super expensive. His one bill 1 month was $200. The following bill was $600 for the following month with both those drugs com- combined. And mind you, he's on a fixed income. He only makes a little bit over $2,500, including a small state pension of about another $200 or $300. So it's really like $2,900 what he actually makes. Uh, Wife, she takes one actual med, simple as possible, and she's only getting $700 of Social Security. So unfortunately, from the Medicare stance, they obviously need help with drugs just because of the cost, but they actually make too much money to qualify for any extra help. So, so that's all. So that's kind of the side conversation that we're actually having, and didn't really dig too much inside of it, other than let me take a look at it for you, see if I get anything different. See if they can find anything that covers that drug, maybe with a little bit cheaper cost, or get some of the out of pocket costs down, so he's not going to a lot of the out of pocket on his own money, paying that additional copays and so forth. And of course, the wife says, "Hey, I go to OSU Hospital, and knowing Humana, they're not accepted there. So that was the easiest lay down during the OEP period. She's like, I want to go to OSU, and if you know Medicare for our area, there's only two carriers that actually go to OSU that we actually can write, being Anthem and Aetna. As well, to tell you that there's three: Anthem, Aetna, and then UHC should be able to go there. So that's an easy one. She doesn't care about the doctor. She just wants to be able to go to the actual medical practice, who's going to be accepted. But for his, like I said, still have to dig into the actual numbers. But like I said, none of this came up other than offering or being a noticer for the first piece of it. It's noticing the giant Humana book that's on his kitchen table, and then also just seeing the frustration that he was having, just knowing that he felt handcuffed. They had no one ever help him. They've only called into those 800 numbers, those Medicaid commercials you see on TV, and it's like I said, it just didn't. He never really had the help and guidance. He didn't know that you can have an agent to help with Medicare. Um, so, like I said, the conversation keeps on going. We end up talking about payment protection plans, and from an income standpoint, it made sense to give him a 9 month plan, and then give the wife a 6 month plan, since his income won't change, but hers drastically will. Um, but the 9 month on his end would still give her enough cushion. Plus, with the other thing that we had uncovered, his two IRA accounts, um, we figured we'll tie in a payment protection plan with the mortgage pension protection plan, which for those that don't know what that is, it's leveraging any type of assets that you currently have. So it could be IRAs, pensions, 401ks, annuities, CD accounts, savings, any type of liquid asset you possibly have to leverage that to gain interest with upside growth without any downside risk, to help offset the cost of your actual mortgage due to using either income triggers, for the lifetime income piece, using some of the bonus products that give anyone from a 5 to 10% bonus on the actual account. The mortgage pension protection plan. Some other people will call it the no cost option, which is you're not spending any money out of pocket for it, but it's inside the playbook. Um, but it's like I said, it's honestly it's leveraging any assets that you currently have to help offset the cost of your actual mortgage. And how we do it, we use annuity products, and there's different styles of them where either Equitable, Guggenheim, Athene, Phoenix, F&G. I mean, there's too many to name, obviously, but there's a handful of them that, like I said, it all depends on the whole situation. Some products can be really good to generate an income stream, depending on where the money came from. So using that mortgage pension protection plan, it's, hey, even if he were to pass away, you're gonna have an option. You can maintain that income stream, or you can take the lump sum death benefit minus the taxes that have to be paid on that actual money, um, based off of where it actually came from. So it came from an IRA, two IRAs to be exact. There's no, he hasn't paid any taxes on it yet. Despite for his age, he has gotten some small R&D checks, but still, like I said, it's all subject to that. So it's you have the option either. So I like the option of keeping that income stream going, do like a joint owners situation, if at all possible, just because you can't outlive that actual money. Um, or do a single owner, and then eventually, once he passes away, you can re-roll that death benefit into a brand new one, and she doesn't have to take any RMDs on it because she'll pay the taxes on it on the front end of it. So there's a lot of different options, a lot of different situations that you're able to do. But the moral story, just like I said, these little conversations, just while we're waiting on hold to figure out what they actually had coverage wise, and just talking to them the normal way I would talk to them if I was doing the actual presentation from the very start. It's asking these small little questions and noticing little things. Um, Opens the door for a lot of different options. I mean, because we're talking about this door's been open for basically to write 5 policies in one house, upwards of, I didn't do the math on this stuff yet. So the life cases were the ones I posted Friday. We're talking $71 premium for him with Oxford, $44 premium for her, 71.35 plus 44.29. 115 times 12, that's about 13. Almost call that one $1,400. 2 Medicares, getting them both on 2 new Advantage plans. That's $255 a piece. That's times 2, and then 510. So that's already right there. That's $1,900. And then if we can seal the rollover, both accounts totaled was $142,000. So I'm actually already bam-fammed it. So I'm going back out there again on this Wednesday, so 2 days from now, to go take care of the Medicare and that annuity option for him. Hopefully in the same day. Otherwise, it'll be Medicare for sure, annuity illustration shown, and start that whole process. And then last but not least, I said 142,000. Let's just multiply that by 0.0. Let's do 725. That's upwards almost $10,300. So all said and done, that one house can yield a check for plus 1910. Look at upwards of spending an hour and a half, or that was probably I'll spend about 2 hours there so far, probably about another 2. So about 4 hours worth of work, and that should yield a commission check worth about $12,205 just from asking a couple additional questions. It's crazy. Just, I mean, the life sale. So the way I always tell people to do it is break down what you're there to do first. Accomplish that goal. Don't get sidetracked. Yes, we have a ton of different offerings that we can do now, but take care of the original reason why you're even there. In their case, it was getting a mortgage payment protection plan. And we took them from spending $2,400 a year down to $1,400 a year. Some people think I'm crazy. You're like, well, you left so much money on the actual table. Yeah, and no, it's at the same time. So what we ended up really doing, so they were spending, like I said, about $100 a pop. That's $2,400 a year for both policies, for $20,000 of coverage that's going to go away in 10 years. And they totally got it because they've had term previously. Instead, we put them into a payment protection plan. Like I said, one was for $9,000 of whole life, other one's for a little bit over $6,000. So their mortgage is right about $1,000. It's $1,028 to be exact. So we just got a small 9-month, 6-month plan. The difference, I said, it's only $115 a month for both policies, which he was ecstatic for. That's freeing up $85 a month. If you take that $1,028 divided by 12, for them to make an extra house payment on their mortgage, do the math, 1,028 divided by 12, that's an extra $85 a month. So this happened to work out almost exactly how we had planned it. But usually, like I said, it'll be very, very close. It's not always going to be that exact number, but in this case, how he drew up everything, it's literally $85. They're still spending $200 a month, except it's only $115 in life insurance products. The other $85 is going towards the principal, because I explained to them the option of, here's how you pay off your mortgage faster. Here's how you shrink the gap faster. The loan's only worth 160,000, and the property value's gone up slightly down there. So realistically, it's the home's probably worth about 180, 180, 85. So they're really sitting on about $20,000 to $25,000 worth of equity as is. So if he passed away tomorrow and she went off and just sold it, she'll be minus the closing costs and anything else that she has to pay for. She might be coming out a slightly positive 5, 10, 15 grand, maybe tops. It all depends on the ask price and just the market. But with him paying that extra $85 a month towards the principal, now this is a 30-year loan. Mind you, they're 72 and 70, 30-year loan. That extra $85 a month knocks off 7.5 to 10 years off that mortgage time frame. So you take the mortgage time that they pay, or the mortgage amount they pay monthly, divided by time, 12 months inside of a year. And the rule of thumb is that one extra house payment a year knocks off 7.5 to 10 years. Because in their case, a lot of people think of it as paying $1,028 in one lump sum check. It's not an easy attainable number. It's a hard number to fathom if you're on a fixed income, especially. So if you break it down, though, by $85 a month towards the principal, so on that third line down, whenever you get your monthly statement, that's what I tell every single person, same exact way. That number is going to go straight towards the balance of that 160. The extra $85 doesn't get caught in the interest, the escrow, any of those additional escrow, and if there are any fees or late penalties, it doesn't get caught in any of that stuff. It goes straight towards that payoff balance, and that's what drives that mortgage value down with what they owe faster, and speeds up that amortization schedule. So it's a schedule to where when you really start a loan, you're interest heavy, your principal down here. As you keep paying on the principal, these numbers are going to start evening out, where your monthly payment at one point is going to be paying 50-50. 50% goes towards principal, 50% towards interest. Then eventually, if you keep paying on that, you'll start seeing your payment go a lot more towards the principal and less goes towards the interest. Ultimately meaning that you save money on the interest and the banks make less money off of your loan, because you're paying down the principal faster. So that small case, if they get their house paid off 7 to 10 years early, they're saving upwards of $10,000 to $20,000 worth of interest alone. If you take out a full 30-year mortgage across, or the 30-year mortgage to pay out off the full 30 years, the entire time frame, you're paying nearly double. In most cases, in this case, they would pay about 320 grand for a mortgage. That's worth, the house is only worth about 160, 180,000. Just because that's how, it all depends on interest rate, but still, that's an average 4 to 5% interest rate that's going on now. You take the full time frame to pay off that actual loan, which is that's crazy, right? That's throwing away so much money. So that little tip, and you can Google this. You can Google amortization schedule if you want to show a client how it actually looks, or amortization calculator. There's a couple of really good ones in the very first couple links where you actually can type in their interest rate, the principal, what date they started their mortgage, all that stuff. And it spits out, it gives you the exact table that they have, as well as the mortgage holder can look at their amortization schedule in their closing paperwork. Unlike all homeowners, that's probably buried somewhere very, very deep, and they're not going to be able to find it. So the simple Google trick will be able to show that additional principal as well, and show them when that mortgage can be anticipated to be paid off. So that's literally how that case works. So yes, did I leave $85, or in our words, another $1,000 of life premium on the actual table? I probably did, but in reality, I'm making that. Would I rather take $1,000 and keep them at $2,400 of life premium, or leverage their money on their life premium, find 2 opportunities to do Medicare, and get a $255 check for the life that they keep that policy, and then also cash in on roughly a $10,000 annuity case by showing him, because he's lost money. That's the reason why this is probably going to work. It's probably going to close. He was telling me the horror stories of, he worked for Abbott, which is a a huge manufacturing company. Um, I'm pretty sure they make a lot of different baby formulas. I think Similac is one of their brands. So the little A, and it's curved A. It's a pretty cool logo, but they make a lot of baby stuff and a lot of different household products. Abbott. So yeah. So when he was working there, they lost 2008, 2009, like everyone else did. They lost about 40 to 50 grand. So he he did the right thing when the time was right. About 10 years ago for him, he pulled out of that those old 401k pension plans, plugged in the IRAs. But with his RMDs, his account's been going down. Hasn't been going up at all, even to compensate due to the fees as well as him taking some small distributions, paying taxes on it. So hopefully the illustrations, they should show him the growth, even with RMDs. That's where that lifetime income rider is probably going to make the most sense for him. Just because, like I said, it's going to be able to preserve that money, and no matter what the RMD is, he's still going to have an income stream coming off of it, and it just makes a lot more sense for him. Or doing a 50-50, do portion one account inside of a growth only model, maybe throw on a bonus just to get it to kickstart some cash flow inside of it, or just do a strictly lifetime income play. So haven't ran those yet. I'm going to be looking at probably Equitable or Guggenheim for those two options for me. Maybe a theme, since they're a newer carrier for us, might give them a peek. But like I said, simple asking questions, just uncovering their pain points. I mean, that's literally what we do on a week in, week out basis. We are problem solvers. These people who send these letters in like this because they have a problem. They are fearing what's going to happen or how that picture looks if one of them were to pass away. What's going to happen to their actual mortgage? Same thing can be said on the filing expense folks here. They send in that card. They go to that Facebook ad. They pick up that phone call. They press form. There's a problem that they're trying to solve. Our job is to understand and figure out that product to start, and then present the correct solution to get them to point A to point B the most affordable way, and the best fit way given their health, age, tobacco status, all those different things that we underwrite with, right? So it's a definitely imperative, but like I said, we find the problem, we present the solution, and ideally we solve that problem, and they become a lifelong client. And by adding extra tools, it takes that. Like I said, I mean, it literally took a $1,400 life case that I would have got just by doing the right thing, helping them out. And if I didn't have anything else inside my tool belt, I might have found the annuity, maybe. But I'm telling you, the Medicare piece is the game changer, because we didn't talk about his annuity money until after I told him we could probably fix his Medicare, and I found out we could probably get his wife onto an actual Advantage plan so she can go see the doctor next month. Um, Once we kind of established that whole piece of it, I mean, he was literally grabbing me every single drug that he's taking. He made sure I write down the actual dosage. I mean, his whole demeanor and the presence of that actual appointment, it totally changed, just by having just that small little conversation of, here's what's going on, here's how I could possibly help. Let me see if I can dig some of the stuff up, because I mean, everything else I already kind of knew. They're tier one and tier two drugs, which he didn't understand the tier system. So just having a little bit of knowledge of how that actually looked, how that actually worked, went a long way for him, just to be able to explain that. And I showed him the problem. And the problem was, he was overpaying for two of his meds, so he thought, or we're seeing if we can find another carrier that can possibly get it a little bit cheaper for him, or a better plan inside that network to get the drug cost down slightly. Um, just hey, here are the two drugs, and here's why they cost so much money, because they're the preferred brand name. He's tried a couple others, which they were probably the generic versions, and the doctors were doing him a favor. And he's allergic, doesn't like pricking himself twice a day, which I don't blame him. He said, I'd rather do it just once a week. And I ultimately told him, well, you're paying for the convenience of pricking yourself once. Is that okay? And so far, he nodded his head with the hope that if he find it somewhere cheaper, that's going to be 10 times better. But like I said, it's just solving problems, especially if you're in the senior space. There's always going to be, just keep your ear out, just listen. Um, asking them, hey, what do you have in place for your Medicare supplement? That's a CMS approved question to ask um, without, and then they'll probably divulge if they have a Medicare supplement or a Medicare Advantage, and then you can go get your scope signed and continue on with that, talking about that stuff. So, but just listening out, like, what are they saying? Well, hey, I'm struggling paying these drugs. I got a new medication. Before, that just meant, oh crap, there's another bill. They're not gonna be able to afford this. And I just shut down and kind of mosey through the presentation, knowing that eventually they're gonna say, I need to think about it because they can't afford it, and then I'll never talk to them again. Now it's a whole different mindset. If they say they can't, they have really high medical bills or a really high drug prescription bill. Oh, why is that? Let's take a peek at it. Let's see why. Especially if they're over the age of 65 now, because it's going to be related to their actual Medicare. So something that I actually could make a difference in and possibly help them. Um, it's not always going to work, but just the effort that someone cares enough to spend an additional 15, 20 minutes or spend time out of their upcoming week to see it, shop the marketplace for them, goes a long, long way in these people's lives. Literally, it goes a long way, and it's proof just because that one little step, which it took me about 30 minutes to write down all those drugs, chit chatting and getting these drugs down, ask us additional questions, glance at a couple carriers real quick. Let's look at their formularies, see if I can find one quickly. I couldn't find one on the actual spot, but um, that meant the world to him. I mean, he was super ecstatic that even if it doesn't actually happen, if I can't make it happen, the fact that I actually tried to help them goes a very, very long, long way, which is also why those IRAs became part of the actual conversation. Because then I was able to tie in, hey, we really don't have to spend $200 a month on insurance products. Let's spend the 115. That kind of takes care of that in the intermediate, the right now money. But I think we can actually do better with your your IRA money. We can leverage that and use that as a crutch and grow it enough to where at least she has another nest egg, as if you had a $20,000 term or a $50,000 term. If you can grow this money slightly, even if it's an extra 15, 20, 30 grand on top of that to help cover the taxes, and she can walk out with a check for 140 or $130,000. That's going to be huge for the actual family. That's going to be huge for her to live off of. And that frees up a ton more options. So it's a long-winded story. It's not done. I'm sure you'll see me report about it on Wednesday once this thing is all wrapped up. But I felt we had to talk about this because it was honestly it's the perfect storm. It tied in perfectly to what we talked about start off the year. I think it was the previous week is just having multiple avenues to your actual toolbox, learning multiple things within the actual industry. Doesn't mean you have to do it this very, very second. If you're especially a brand new agent, definitely don't do it this very second. But start just being curious and kind of putting out the feelers and getting familiar with what's inside the marketplace. If you've been a veteran, you've been here for 1, 2, or 3 years, and you haven't got your Medicare license yet, or your health and accident, I would definitely do it. It's the time could not be better for you to actually do it. Um, just the renewal money on the back end side, phenomenal. But in reality, it's really the ability to, like I said, to delve in and build this different type of trust. Because everyone has to have healthcare, and everyone over 95 or 65 has some type of Medicare product in place, unless they're still working. Um, so it's always going to be there. It's always going to have an opportunity presented to you. So it only makes sense to be able to plug in, offer something. So you're not going to help out every single person, but the ones that you do help, the carriers will take care of you. Like I said, we're talking about if I get both of these, that's another $510 to the pot every single year come January 6th. Every single year, $510. So you can imagine if you do 10 of these, 15, 20, 100, so forth. Um, those meal checks that Ricky's talking about of getting a check for 10, 20, 40, 50,000, $100,000 checks, 100,000 plus checks. These it's definitely real. It's like I said. I think Ray made the most out of all of us. About almost 5 grand, I think, in Medicare. I made about 1,000. I only wrote 4 or 5 policies, but still, it's an awesome check to have that mailbox money coming in every single year. And all you have to do is just service the clients, make sure they're in the best possible thing. If things change, you can just adjust them to their proper product. But definitely, if you're getting into the final expense space, it's a great cross-selling opportunity. You're definitely leaving money on the actual table. But lucky for you, there's something called AEP, which means AEP. Um, yes, for most of them, you get paid once a year on the Medicare Advantage stuff. Med Sups, you can get checks. I think they pay what every 2 weeks or weekly, depending on the carrier. Um, Dental vision hearings, you pays regular. Just Medicare Advantage pays once a year. Unless you're doing a dual special needs plan, which I think you can get paid monthly. I think it's like $21 a month or something. Um, but no, that's something more to talk about. But I would start with the licensing process. Um, Anyone that needs licensing, reach out to me. I'll give you the links. But it's through Excel testing. I think the code's Team IFG, and it takes off. It makes the course like 40 or $50. So definitely recommend doing that. Real quick, and we went for 40 minutes. And anybody have questions about anything or any topic you wanted to cover?
Excuse me, Marcus. You were talking about the Medicare and going back and or getting that license. Can you kind of go into just slightly how long that takes to go through the course and
Yeah.
is it challenging and the testing and everything?
Honestly, it was. I got licensed for Medicare. It took me 2 weeks, approximately. Because the course, believe it or not, half the course is laws and regulations, and especially if you've been in the industry for a while, the laws that they talk about, um, it's stuff that you've kind of heard of before, like how they talk about disabilities, the co-insurance. I mean, I wouldn't say it's difficult. It's definitely a. I would. I mean, I wouldn't say it's easy, but it's kind of that middle grade test. If you've been around for a while, you'll start seeing a lot of terminology that you've seen, and you're just really getting a refined definition of what it actually is. So it makes it a little bit easier to actually pass the test. But same laws and regulations. What's a peril? What's a hazard? So a lot of the basics are still on the actual test. That's a good 3 to 4 chapters of it. And then tax consequences. I mean, it's not that far off from the life course, except you get to the some of the health pieces going through their specific definitions and some of the Medicare definitions. It's kind of where it starts standing out. But I mean, I've had people say it's all going to be depending on how much time you have to put towards it. So, I mean, for example, Ashley, it took her, and Ashley actually passed the course. Um, she struggled with her life test a couple of years ago, but health test she kicked his butt. And she ended up passing it within like 4 or 5 weeks. I think we were traveling, I missed doing it, but she ended up taking her test, is it 2 or 3 times for it? Um, Passed it. So she's all health licensed now. I took it once, and it took me 34 minutes to take their actual test. I just blew on through it. Like, it was super, super fast. But like I said, everyone's going to be slightly different. I mean, it could take you, if you're familiar with most of the content, it could take you 2 weeks to get the course done. It could take you 3 or 4. It all just depends on how fast you go, and then availability to get the state test done. Then you have to get another background check unless you already got one for this actual year. You have to get a background check done as well. So all said and done, it's the same about $150. But the only kicker for the healthcare piece of it, it's passing. If you want to sell advantage plans and drug plans, you got to do or no. I think you have to take the. I think it's just advantage plans and drug plans. I'm almost positive. You got to do the AHIP. So that's just a CMS basically exam. It's a course. It's like $150 for that course. Some carriers do give discounts if you write more than 5 applications to cover their AHIP costs. But it's think of it as AML but for health. And the way that works, you go online, you take all that stuff. We do have a lot of guides and resources to help throughout that process, so you don't fail it. Because if you fail it 3 times, you got to wait till the following year to take it. But we have a lot of guides, resources, and tools available to pretty much 95% make sure you pass that thing within the first couple shots. Um, Then from there, each carrier is going to have their own couple modules talking about their products. So I mean, there's a lot more. I mean, healthcare, I would say, is a lot more training. But once you kind of get the hang of it and getting this, I mean, I think the state test is probably the hardest part. Once you get the state test done, and all the guides and resources we have to help through the rest of it, it's not that hard. Um, but it's something you have to do for Medicare Advantage plans. You have to do it every single year. So AHIP and then carrier certifications for each carrier. We've talked about the new product changes, but like I said, once you do it a couple times, you start breathing through it. So once I did the first one, I think Humana was probably the longest one. Then once I did the Humana one, the other two or three were like cake because they had the same exact questions over and over and over, and I already knew what those words meant and so forth. But definitely worth it. Just so that's how you maintain your renewal check. So it's one of the things when you get to the healthcare space, you gotta be in it for the long haul because in order to maintain your renewals coming in every single year, you have to keep taking certification every single year. Uh, Unless you got grandfathered in years back, we don't have to do that. But all of us now, we have to do it. So, but like Justin Brock will put it, I mean, you're getting a 6-figure or 7-figure check every January. I'll spend 30 minutes or 3 to 4 hours come August to make sure I'm going to be certified for the upcoming year. So I keep getting that actual check. It's definitely worth it. So, um, but no, it's a really good question. I would definitely look into it. Not even if it's not to sell Medicare. I mean, it opens up the accident and health space too. So you're talking about disability plans, accident only policies, standalone disability options. You don't have to sell Medicare, but we can get you contracted with dental, vision, hearing carriers. Sell hospital indemnity plans. So it's a lot of different supplemental items you can sell with the accident health license. It doesn't have to be the Medicare specific stuff, but it all kind of goes lumped into one big old thing. Standalone cancer policies. A lot of people want the Mutual Omaha cancer policy. You can sell it with the accident health license. So I mean, there's a lot of different products to sell. That's just scratching the surface. Um, you get into the employee benefit space and small business owners and groups and doing the group benefit through Colonial Life. And we have options to do that now. I mean, there's so many different options to use your accident health license to just get additional products that we can start cross selling. I mean, you can start asking every client. I mean, that's or family that's dealt with cancer before. Hey, does your spouse have a cancer policy? Getting those taken care of. So, I mean, there's a lot of different options, a lot of different avenues to take. Medicare seems to be the most lucrative, especially just given the rate that people turning 65, the baby boomers, it's 10,000 a day for the next until like 2035. So basically, the next it's like 2033 or 2035, next 13 to 15 years, 10,000 people a day are turning 65. I mean, there's 10,000 new people that need Medicare every single day. So it's a lot of opportunity, to clean up previous policyholders' issues if they have things. So I mean, it's if you look at it, easy way to do it. Look at your market and look at your leads and start seeing how many leads you actually get that are over 65. Each one of those leads is someone that you can cross sell. That's 2 applications or 2 opportunities to sell them something versus only trying to sell them a life product. So that was the eye-opening piece for my end of it, just seeing that. Real good question, Roger. We can talk more about it off the actual call. Any other questions, comments, concerns? I mean, Ray, you're on here. Was Medicare worth it? Let's see if you walked away from this computer. Ray, you there?
Yes, I'm here.
Yeah. Oh, so was Medicare worth it?
I was thinking it wasn't worth it in the beginning, but I kind of felt like I was on an island by myself trying to figure all this out. But to get with a good support team, and all this was new to IFG and everything else, and once you get it under your belt, I mean, it's almost like secondary. There's some things you run into that will kind of stump your toe, but if you got I have a great support manager, Larry Lane, in Charlotte. If I have any problems with Aetna, I just call him. He kind of gives me all the support I need, and like they have conferences and stuff like that. And it's just kind of intimidating in the beginning, but you will mess up, and It's just a learning curve. But I mean, like on the 6th of the month, I got like from one carrier, I think it was $5,000, and then I did some med subs, made another 1,600. I mean, it's just money out there. I mean, somebody's got to do it. Why not us?
Yeah, exactly. Why not us for sure? Because I mean that's really I think Ray only wrote about 30 or 40 policies. I mean, it wasn't a crazy amount of Medicare Advantage. It was a
I think
handful of
30
subs.
altogether, including like some. I did a couple Manhattan Life, the scripts, the
Some
PDPs,
drug
the Part
plans.
D. Yeah, because that's another plan. So if you sell somebody like a Medicare supplement, you have to sell them a drug plan. So that's another policy. So it's it's a lot to learn, like I say. But my thing is get in your area, find out what, like, go to Medicare.gov and find out what's predominantly. It's hard to get with everybody. Like my two major carriers is Aetna, Humana, and then I have WellCare. But WellCare, like in North Carolina, doesn't do a whole lot. But I do their drug plan because it's like $16.70 per month, and it's very affordable. Versus like a Humana might be like $60 a month. So I just kind of
Hmm.
shop it around. I mean, it's just you just have to play around with it.
Yeah, but shop it too. I mean, there's a lot of different tools. I mean, Medicare.gov is the one that everyone can use, meaning consumers can use it, their POAs can use it. They can all shop it. It tends to be the most accurate. Kind of
I
has
still use it. I mean, even to this
yeah,
day. I mean, before I go to a hospital, like every zip code, there's a different plan. Every
exactly.
county's a different plan. So I go to Medicare.gov, find what's in the plan. Like the Medicare.gov on the drugs is not going to be correct. Their drug formulary is not correct. So you have to actually go with your carrier that you choose and go through the formulary there and find out,
Oh man, yep.
yeah, what
So
drug tiers, what.
yeah, I mean, it's like I say, it's a good baseline. But then even on top of that, there's a CSG aggregate, which I mean Ray's gonna hate it for now because they messed up his Humana quote. But basically it's a quote tool. You basically type in, it gives you all the different options in that zip code and what they should be price wise. I mean, for med sub, for PDP plans. I mean, it's a pretty nifty tool. Um, but yeah, there's a lot of different resources. I mean, it's a lot of different things to use. Like, so it was IFT's first year doing it as an actual group. I mean, One Life has been doing this in Heartland for years. I said, I mean, if you know about Brandon Clay, he always preaches look at Medicare. Um, so I mean, it's a they've mastered it. I mean, because I mean, even one of the carriers, I mean, Heartland National, that's owned by Heartland Financial Group. That's their own company. So we're able to sell our own company's products. It kind of goes hand in hand. So that's how I mean they have a real good MedSet product, really good priced, as well as their hospital indemnity plan, which I've sold a handful of those. Um, it's yeah, it's not a bad gig that they have set up for us. So it's really just a plug and play. It's a system that has going to have a learning curve to it, but just like I said, man, I stumbled and bumbled. I bought zero final expense leads, and I've sold everything off of my MP leads. Clients I was sitting with, I closed an MP sale, whether it be a term or a payment protection plan. Then I went and talked about their whole Medicare piece of it. Um, so I mean, it's the money's out there, and then there's even some people. I mean, that I didn't sell them anything on the life side, but I was able to help them with the Medicare stuff. So just being able to have that I'll call it probably now the triple threat. Be able to have your life, health and accident, Medicare, your annuity knowledge. I mean, that's going to give you the best way to possibly pivot inside of an actual house because they're not going to be a one size fits all plan. Or there's going to be cases where if you're not asking the right questions, we're leaving a ton of money out there. Or there's going to be cases where, which probably the one that usually happens the most, it's some people do have some pretty dang good insurance products. There's nothing we're able to do with them for the life side, or they're too jacked up to even get them on the life side other than GI. But now with Medicare, it's a totally different ballgame. We can still help them, we can still serve them, still get them different things that they can leverage and use, and come out of the house with something versus being empty-handed. So that'll be my 2020 push for it. I saw the light, not so much from you said just missing opportunities, but to be able to is build the revenue stream. Because like I said, if you on the NP side of things, we get paid once from the life companies, one entire year. That is it on term products. ULs, you get paid once with a small little tiny check for any type of overages or renewal money. And then whole life, you get paid once, but then there's a a little bit bigger than the term ones, but any type of renewal checks from a 0.5 to I think it's like 4 to 5%, depending on the company. Some are even 6 or 7. Like Prosperity is crazy high for the renewals, but um, it's a lot of business to get to that. Oh, I'm making $1,000 every single month, or I'm making, I mean, should say $12,000 a year from your renewals on your final expense product. That's a lot of apps to write, a lot of apps to stay on the actual books. To where Medicare, I mean, like I said, I've made it's a little bit over 1,000, it might be 1,300 or ish, but that's from 5 policies I wrote this past year. 5. Now I'll get the same 5 again. It'll pay out a little bit less just because those 2 first year people, I think it's inside that mix. So those first year people, they never have been on Medicare Advantage before. You get paid double. Essentially, you get paid 510 per person. So I take that back. Yes, I must have made like 1,500 then, because I wrote that was Humana. Or no, United Healthcare was 2 brand new people, never had Medicare before, and that was $1,000. And the other, I did an Anthem, and then I did a Humana. Yeah, so that was a little bit over $1,500 almost. And then there was a Medicare, what do you call it? Or hospital indemnity plan. That's another like $300, $400. So yeah, basically first year I made about $2,000 on accident in Medicare. And then I'll probably get of those about $1,000 for sure guaranteed next year to come in, and then whatever else I add to it throughout the year. So with that being said, sorry we got off into a totally side tangent, but I think it's valuable information. I think it's worthwhile to talk about, and like I said, I just try to give a real life example of what I'm actually working on now for an actual case, and just showing, just like I said, the main premise is being a triple threat agent, probably the best way to call it. Having some good knowledge about your life products, what you can do on that side, that's going to be everyone's strong suit, or that's going to be everyone's dominant hand from a sports reference. And then from there, you have your Medicare, which that can be your offhand or kind of your backside stuff. And then the annuities is kind of totally the left field stuff, or you could flip flop those. It all depends on how much you actually know about it, each of those different topics. But just having 3 different places to be able to pivot to and at least talk somewhat intelligently on will make the world a difference. And just so happened in this one house, I said I found all 3 of them I was able to touch on and built that relationship with them enough to where they trust me to go forward to look at something else, to just give it a chance and see if it actually makes sense for them, if it's going to truly help them. And overall, it's like I said, I'm going to be their agent for life after this. I got their life business, I got their Medicare, I'm going to get their investment stuff, and then only thing to do from there is see if I can save money on their homeowners and auto, which I'll end up referring out to Jared or Sean at home office to be able to take care of it. So we were talking upwards of 7, 8 policies in one house, commission wise, upwards of over, I forget what the number was, over what, 12,000 or something, 13,000. I forget what the number was, but still, it's a ton of money to make off of one actual home and serving people the right way, doing the right things. But once again, have a good MLK Day. If you're not in Ohio, it's a beautiful day for some activity. For in Ohio, it's gonna suck to it's cold. So I got one appointment, and I might do 2 or 3 door knocks and call it quits because it's freezing. But have a real good holiday. Maximize your time. If you're not gonna go out, make a ton of phone calls today. A lot of people are home from work. Kids are off of school, so take full advantage of it. And like I said, everything is relevant based off your activity. Next week, we're probably going to do the IUL call. So I'll probably open up this call to everyone at IFG to do that one topic, going over some IUL basics. And honestly, the IO basics is probably just going to be focusing on National Life Group and Foresters, probably the only two we'll talk about. Because if you can master those two, everyone else is kind of the same thing. They're not really different. But I think I'll open up the call next Monday for that. And those that are local to Ohio as well, or even those that aren't too far, trying to finalize some details, but I'm pretty sure me and Waylon, our trip, we're going to actually team up for a training boot camp end of February. It's looking to be that the last Friday and Saturday of the month. Full day Friday, half day Saturday. I'm trying to figure out the details of where at, but it seems to be that's the 28th and 29th of February. Looks to be it's going to happen. Got to still get a couple other things ironed out for this month, or we might have to push it back to another week or two into March to give people that 4 to 6 week period of time. But we're looking at doing it in Columbus, so it'll be in Westerville actually. There's a new hotel off of Players Parkway, so not too far from the airport. People want to travel in, drive in. It's kind of a prime time spot, but we figured both have pretty decent sized presences locally, as well as in there's a lot of people inside of the Cleveland area, so trying to get some other people to come in, and a lot of IFD agents are kind of scattered out north and northeast Ohio, as well as some people in south, so kind of give that centralized spot, even people from West Virginia, Kentucky, Indiana, some PA agents. Make it to where it's about a 2 to 3 hour drive from anywhere inside of our state to or surrounding states to come on in and kind of just listen, learn. And so he's going to be training mainly on his FE presentation. He might go into his telesales stuff, which would be awesome. And then I'm going to talk about what I usually talk about, MP, how to leverage it, maximize it, and become the best you can be at it. And hopefully, I want to talk to one of the Medicare reps, see if I can get them in to kind of talk about some basics of Medicare as well. Just let you guys hear it from them, not from me. So, it's looks to be pretty good. We just get the details ironed out, which is the dates, the location. Has to figure that out for sure. If it's not Westerville, it'll be in Powell. So that's a for sure given. But as I said, if any guys need anything this week, let me know, and then probably the following week we'll talk about transmittals and contracting. Agents that are doing downline work now, reach out to me this week. We'll get it done. I'll show you how to walk you guys through it if you haven't done one before. But yeah, you have a good day. Keep the activity levels high, and we'll talk to you guys soon. Take care.